Hi, everyone. This is Monica Guy with Remax Real Estate Associates here in Houston, Texas, your third generation real estate agent coming to you live to share with you everything that you need to know about buying a home with an FHA loan. My guest speaker for today is going to be Maite Armas, and she's going to be talking to you about what you need, the documents that you need, all that good stuff about FHA loans. If you have any questions, now is the time to type them because we'll come back to them at the end. So I'm going to bring her on right now. Welcome, Maite. How are you?
Hi, everyone. This is Maite with Modern Mortgage. I'm here with Monica. Thank you for having me.
Hey. So we are going to talk about today buying your home with an FHA loan. And I know that there's a bunch of different loan types, and I know that we're going to talk about the FHA loan. So tell me, what is it? What does FHA stand for? And I know it's a different loan. You're going to go over everything that we need to get pre-approved. Is it just for first-time home buyers? What is it?
It is just for first-time home buyers. It's a government loan that's geared for first-time home buyers that is less strict than a regular conventional loan. The minimum down payment is 3.5%. They allow you to have non-traditional credit, to establish credit if you have no credit. So it's a really great program, and we go down to a 500 credit score. So it's really an amazing program. It allows us to do a lot of stuff that normal conventional loans don't allow us to do, and exceed the ratios a little bit. So it's a really fascinating program for first-time home buyers, and it lets you go into a house as little as 3.5% down.
Okay. So what is it that they need to bring? I know that there's documents that they need to bring for pre-approval. So I'm going to have them go across the screen for those of you that are watching. If you are not able to get all of this information, just let me know and I'll send it over to you. But it is going across the screen. So again, what is it that you need them to bring to get pre-approved?
For the initial loan application, we would need your 2 years tax returns. If you're self-employed, only your tax returns. If you're W-2 employee, we will need your past 2 years W-2s, your past 30-day pay stubs, and your 2 months bank statements for the past 60 days, copy of your ID and social, and that's pretty much all you need. And then as soon as I meet with you, I'm able to issue an approval immediately. I run DU, I run LP, whatever criteria you can use to run findings for you, and we issue the pre-approval the same day and the same time that we meet with you. So you could be pre-approved in less than 30 minutes.
Okay, now you mentioned two letter. You're speaking lender terms, and I like to speak in layman's terms. So, what do you mean by DU? What is DU?
It's an underwriting system that we use. It's a software basically that allows us to plug in all your information and it shoots a pre-approval back to us, and it basically tells us, hey, this is what we require for this client.
Okay. Hey, and thanks for watching, y'all. I know you're here. If you're here and you have a question, go ahead and post it in the comments so that way we can answer it at the end of the broadcast. And then you said LP. What is LP?
It's just a different engine. The same. There's DU and LP. There's a different engine. The different criteria. It's different scenarios. So we run different engines to get people pre-approved. So it's the same thing, but we issue the pre-approval immediately. Once at the time of the appointment, we issue the pre-approval. So
perfect.
It's really convenient. It's easy. As long as you bring the documents, we issue the pre-approval right there and there. You can start showing your clients houses immediately.
Okay. And then we talked about the 3.5%. The 3.5%, what does that mean? Or what does that represent?
The 3.5%, basically, that's the minimum down payment that you are required to contribute to the house. So let's just say in basic numbers here, 100,000. If you're buying a home of 100,000, you're required to put 3.5% of 100,000. So that equals out to $3,500 plus your closing costs. But
those are separate.
Yes.
The way I like to describe it, or the way I like to explain it, and just tell me if this is the best way to say it, but what I like to say is your down payment is connected to the price that you're paying for the home, and your closing cost is kind of like your TT&L, like when you buy a car, which is the taxes, any kind of
tax title,
HOA, all that other stuff to kind of wrap up the deal. So they're two separate things, but they're two. Both of them are still both buyer responsibilities. So that way, the client understands that since the 3.5% is connected to the price that they're paying for the home, is that if we go up in price, then the 3.5% is going to go up as well.
Correct. So yes, your down payment is you lower with the down payment. It reduces the amount you're going to be financing. Your closing costs doesn't reduce the what you're financing. It's separate from your down payment. It's basically your mortgage fees, your title policy fees, your escrow fees, and when your taxes, it's those your prepaids. It's basically those are your
everything
that are associated with the loan.
Okay.
Buying a home.
All right, so let's go over everything that we need one more time. So basically, the pre-approval documents, they're running across the bottom of the screen now. Those everything that you would need to bring so that she could meet with you and see if you can get pre-approved. You would also need the 3.5 down for your down payment, plus your closing costs, and then the credit score needs to be what again?
We go down to 500. Every scenario is different. It's just a matter of looking at your information to determine whether or not we could go down to 500. But as low as 500.
Okay, perfect. Well, that is pretty much it. That's a wrap, everybody. Thank you for joining me.
Thank you, Monica.
And Maite, thank you for hopping on and explaining everything about the FHA to us. If you have any additional questions, I didn't see any. I've been checking the comments. I did not see any questions pop up. But I do want to say that if you do, then you can also put #replay. That way I know that you're watching the replay, and we can come back and answer them in the comments. So if you're not able to get your question answered today, then you still can get your, I can still answer them, or you're more than welcome to just let me know directly. So either way, I'm available. We are going to be talking about what kind of loan next week?
Conventional.
Conventional loans are up next week, so pay attention. I will post I'll post on my page when we will be going live again, so you can have your questions ready and you'll know what time that we will be on the air. So thanks again for watching. This is Monica Guy with RE/MAX Real Estate Associates, and
this is Maite with Model Mortgage. Thank you. Have a nice
Thank you. Thanks for watching, y'all. Bye.